All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert. Joining us tonight is Marc Chaikin, founder and CEO of Chaikin Analytics. As a reminder, this webinar is being recorded, and a copy will be sent to everyone who is registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen, as well as at the bottom in your Zoom toolbar. Now, before we get started, we have a special guest with us today, the founder and CEO of the Candlestick Trading Room, Steve Bigalow. Steve has over 30 years of investment experience, including 8 years as a stockbroker with major Wall Street firms. To get us started, here's Stephen Bigalow.
Well, thank you, Joe. Welcome, everybody. Yeah, Marc and I have been working together for quite a few years, and Marc has probably been what I would consider the most, or I envy the most, because I can remember years ago thinking if I could take all the indicators and kind of correlate them to where I could see where most of the indicators are working in the right direction, boy, man, that would be a good trading platform. But I was never sophisticated enough to figure that out. Marc has done that, and not only done it so well that it's probably one of the best trading services that many money managers on Wall Street uses. So with that information, he's going to show us how to trade options using that, correlating that information. So with that, Marc, we're anxious to see your information tonight.
Thank you, Steve, and welcome everybody. Hope everybody knows that today was a very special day in the stock market. And the reason was that the financial stocks turned around, very unexpected, and they carried the small cap indexes with them. So the beginning of this webinar, we're going to talk about the market, where it is, what you should be focused on, and what you should be ignoring. And I think that's actually the start of how you trade options like an expert. So a little bit of my background: 50 years on Wall Street. Started out with a fundamentally oriented brokerage firm, but pretty quickly I realized that technical analysis was very important. So if you combine fundamentals with technicals, you really have the whole package. And that's what we're really talking about on tonight's webinar, how you combine fundamentals with technicals to trade options like an expert. Now, along the way, I headed the options department at a very fine regional brokerage firm, Tucker Anthony and R.L. Day, got folded up into John Hancock. They had 20 branches, 250 brokers, tens of thousands of options traders. 95% of those traders lost money. Can any of you identify with that? If you can, please type a big Y in the question box. And I'll tell you the reason that they lost money: they didn't understand the importance of a directional edge. And we're going to show you how we provide a directional edge and how you can benefit from that. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were clients, some of them were colleagues at firms like Tucker Anthony and Drexel Burnham. The reason that's important is that in 2009, after the financial collapse of 2008, I created something called the Chaikin Power Gauge rating. And as Steve said, I fulfilled a lifelong dream for many of us. I created a 20-factor quantitative model that did the fundamental heavy lifting. It's the culmination of my life's work, and I'm very pleased to be sharing that with you tonight. Now, quick disclaimer: we're not registered as a broker-dealer or investment advisor with any state or federal regulatory agency, so all the examples that we're using tonight are for educational purposes only, not meant to be a recommendation. Now, we've been very fortunate since my wife and I started Chaikin Analytics in 2010 to have gotten a lot of media attention. Most recently, we won the Benziga FinTech Award for Best Idea Platform Tool or App. There were 18 other people in that competition. There were about 20 different awards that night. It was a big night. Mr. Wonderful, Kevin O'Leary from Shark Tank, who's just started his own ETF, was there as the master of ceremony. Got to spend some time with him. He's a real character. And we were featured in an article in Forbes this issue about the Mexican economy and how to play it using the Mexican ETF, which is what we talked about. So we've been very fortunate, and we're fortunate to have partners like Steve Bigalow at Candlestick Forum. Have a lot of respect for what he does. He did a great webinar to our audience last night. Love some of the technicals that he combines with the candlesticks, and the reason I mention that is because very compatible with the approach that we take at Chaikin. Last night he talked about the doji reversal pattern and how that can help you find tops and bottoms. Obviously very important if we get you into a trade. Getting out is an art, not a science, and Steve has mastered that art, particularly with his doji patterns. So in the next 45 minutes, you'll discover 5 profitable keys to options and swing trading. Starts with a fundamental rating. That's your directional edge. That's how you become one of the 5% who make money, not the 95% who lose money trading options. We think it's also critical that you know whether a stock that you're trading from the long side is outperforming the market, or if you're buying puts, swing trading, and the downside, whether a stock's underperforming the market. We're going to show you how to measure institutional buying and selling pressure using Chaikin Money Flow. Now, I know a lot of you are familiar with Chaikin Money Flow. If you're trading options, you're using an online broker, Thinkorswim, TradeStation, Fidelity. It's on every package. You can get it on stockcharts.com. I'm going to show you how to use Chaikin Money Flow in a special way, something we've been teaching institutional investors for years. Then we're going to talk about playing good defense, something that's rarely talked about on webinars because we all like to focus on batting 300, hitting home runs, the grand slam, if you will, but playing good defense is really the key, and we're going to show you what that means and how you can do it. And then finally, we're going to end the webinar showing you how to profit with options during earnings season. Some real opportunities during earnings season. Starts up again in the second week in July, and then we're going to have a very special sort of preview of our newest innovation, which won us the Benzigo Award, our Stock Discovery Ideas Engine. So let's start by asking you a question that I think is so important. Is politics getting in the way of your trading? We know there's been a lot of turmoil in Washington. Part of the reason that the market rallied in the small caps today, in my opinion, is because the Comey testimony is out of the way, didn't inflict any mortal damage to the presidency. Things are pretty much status quo, but small caps have benefited in the beginning of the Trump presidency because of deregulation, promise of rising interest rates if the Trump agenda gets passed, and there's a lot of opportunities in small caps. Some small cap stocks are in essence like options themselves, and so if politics is getting in the way of your trading, please type a big T for Trump into the Q&A window. And I see that this audience is very similar to a lot of our other webinar audiences. You're spooked by what's going on in Washington because it captures the headlines, and scare headlines are meant to make you lose focus. So let's look at what really happens when unsettling political events surface in the US. And the reality is that over the last 50 years, unsettling political events do not cause a bear market in stocks. I'll just review a couple of them. 1963, President John F. Kennedy was assassinated. The bull market in stocks resumed 2 days later. If you don't think Wall Street is a pragmatic and heartless place, there's the proof. 1970, Kent State shootings, very unsettling. We were in the middle of a 2-year bear market. It ended 1 month later. I'm not going to read all of these, but 1998, impeachment proceedings drawn up against President Clinton. That bull market continued for another 2 years. Unsettling political events do not cause bear markets. But here's what does precede bear markets: recessions. And how do you predict a recession? Well, there are 2 simple economic indicators among a suite of perhaps 5 that they use at the Federal Reserve and big Wall Street firms. And they're pretty clear-cut. They make sense, which is important. Things have to pass the smell test. This is not a Super Bowl indicator. The first is a 12-month moving average of housing starts. Since 1960, the 12-month moving average of housing starts has turned down ahead of every recession, and almost every bear market is accompanied or associated with a recession. So where is that indicator today? In spite of a couple of months of bad housing numbers, it's rising. It's at its highest level since the bottom in 2009. So no recession predicted based on housing starts. The second indicator that's really important and reliable is the relationship of leading indicators, leading economic indicators, to coincident indicators. Again, since 1960, every recession has been preceded by a turn down in that ratio. Look where it is now. It's at a new high for the cycle that began at the bottom of the economy in 2009. So neither of these two highly predictive and reliable indicators is predicting a recession. What does that mean? It means you should ignore the headlines. You go on CNBC and you listen to people predicting a bear market based on some indicator. And usually they're short the market. And sometimes they're very successful investors like Paul Tudor Jones or Carl Icahn, or today Bill Gross from PIMCO, or formerly of PIMCO, now with Janus. Earnings move markets. Politics doesn't move markets. So here's one final headline. March 31st, caution signals are blinking for the Trump bull market. What has the market done since March 31st? It's made new highs. It's up 4%. So if you follow the headlines, you're going to be dissuaded, pushed away from your game plan, lose focus. The real reason that markets move up is when earnings are moving up. So here's what's really important. Market direction. Got to have some sense of what the market is doing. Trend of corporate earnings, trend of interest rates, and most importantly, stock selection. There's your directional edge. So here's the likely scenario for the balance of 2017. We're in that upper right quadrant, shaded in blue. Higher interest rates and rising earnings. Now, what's really interesting about the market is that the Fed has been telegraphing, telling us that they're going to raise rates at least 2 more times in 2017. One of them's likely to come next week when the Fed meets on Tuesday and Wednesday. That's going to be your second interest rate hike in 2017. There's probably a third one coming. In spite of that, yields have been dropping. The 10-year Treasury was dropping, but the reality is interest rates are going up in 2017. Now, because interest rates have been dropping really in a sideways channel for the last 4 months, the bank stocks have been down. Guess what happened today? Small cap bank stocks were up between 4 and 7%. Why? Because interest rates have started moving up again. Trump came through relatively unscathed by the Comey testimony. That means that Congress may be able to start focusing on the Trump growth agenda. Trump growth agenda is good for the economy, infrastructure bill, defense spending. It also means interest rates are likely to go up because there'll be a little bit of a whiff of inflation with employment very strong, wages going up. So we're in a very, very strong period because earnings are also rising. And remember that last slide, earnings move the market. We had a year-over-year increase in the first quarter, 14% in corporate earnings. That's likely to continue in the second quarter, which we're wrapping up. So we'll know in July with a lot of certainty that we've had 2 strong quarters in 2017. So we're in a very bullish scenario in 2017. And this chart of the SPDR ETF, the SPY, which represents the S&P 500 large cap index, tells the tale. We were in a very well-defined channel until we broke out in February above the upper trend line. That was important because it said that the market was basically trending up in response to anticipation of great first quarter earnings, which were released in April. Then we had a little bit of a pullback, and now look where we are again. We're above that upper trend line. So this is a very bullish scenario, and it's confirmed by Chaikin money flow, that green indicator right under the price chart. It's been strong for this whole move, and it's strong once again as the market's making new all-time highs in the Dow Jones, the Nasdaq 100, the S&P, and then today the small caps caught up. Now, again, if you were watching CNBC over the last 2 weeks, a lot of stories about how small caps were lagging and they were a predictor of selling to come. There was even a story yesterday that the big hedge funds are short the Russell 2000 small cap index. Well, guess what? That index was up almost 2% today with the large caps flat. So don't believe the headlines. Do it for yourself. Find out a couple of indicators. We've got them in Chaikin Analytics, money flow, our relative strength indicator, just some simple patterns in stocks. Figure out where the market is headed and then trade in that direction. Now, one final chart that I think is really compelling. From the bottom in 2016 in February through the rally to the February peak in 2017, the S&P 500 rallied 25%. Now, if I had covered up the right-hand portion of the screen and asked you what you thought would happen next, I know from a question that we asked on previous webinars, most people thought that the market would probably pause and correct. The reality is that over the last 60 years, half the time after you get a 25% rally in the S&P 500, you go up an additional 25%. Another 25% of the time you rally and average about a 5% gain. That would take us to the 25-20 level. Our long-standing target has been 2450, 2500. We're about to see that be realized tomorrow, I believe, if we close the week out strong. But we're almost at the point where we're ready to raise our target, not quite to that additional 25%, but maybe to 2550, 2600. So there are opportunities in the market. But if you're spooked by the headlines, spooked by the turmoil in Washington, you're not going to be looking in the right direction. You're going to be looking at shadows, thinking there's a bear market coming. And inevitably you get a correction, but a correction is your friend. It's an opportunity to buy stocks, put on call positions on weakness, which is ideal from a timing point of view. Now, in case I haven't convinced you that the market is likely to go higher, here's a wonderful way to hedge yourself or make money on the short side. We've got an options idea module in Chaikin Analytics, which is our platform for traders and investors, called Options Play. It's been licensed by Merrill Edge, by Raymond James, Street.com. A lot of validation. Early on, I said, this is so compatible with what we do at Chaikin. Probability-based fundamental quantitative model. This is a probability-based options model. So I just typed in SPY into our system. It immediately came back with a bearish vertical put spread, high probability, where you could make 250% on your money if the market dropped 3%. Now, we don't think it's dropping 3%, and this isn't a recommendation to buy this, but this is how easy it is to hedge yourself or make money if the S&P were to drop 3% between now and July 21st. Now, there is something special about the S&P index. How many of you realize that 6 stocks, the FANG stocks, Apple and Microsoft, accounted for 40% of the gain in the S&P 500 index between January 1 and May 31st? 6 stocks. So if you're betting on the S&P 500, if you're buying the spider, you're basically betting on 6 stocks, not 500 stocks. That's pretty dangerous. So there may come a time when those stocks fall out of favor, when they just get overowned, Google and Amazon banging up against 1,000. And a put spread like this is a high probability, low risk way to trade the downside. So this is one way that you can trade options like an expert, because options traders who are putting probabilities on their side are not buying that put outright. Notice how it's circled in red with only a 71 score. They're putting the odds in their favor by buying the 244 put, expiration July 21, selling the 237 against it, reduces your cost, raises your probability. That's a way that you could be protecting against the downside. But we think you should be looking for opportunities. One of the things that stands in the way of opportunity is a big problem we all have: information overload. In our daily lives, it's Snapchat, LinkedIn, Twitter, Facebook, email, and so forth. On the investment horizon, it's CNBC with talking heads on all day long with differing views. It's the various websites. One thing that Steve Bigalow does in his chat room, he cuts through the clutter. That's something we believe in. He cuts through the clutter with his candle patterns and some very, very powerful technical analysis. We help you cut through the clutter by taking all that ugly fundamental data on the right of the screen, crunching it down to 20 inputs into 4 primary factors. We call that the Chaikin Power Gauge rating. Now, this is a slide that I'm not going to give up easily because I created it for a webinar that I did on March 27th. And we used Lam Research as an example of a stock with a very bullish power gauge rating. 4 primary factors. The stock was 127.80. It traded above 160 today. I think it was 162. 165, my wife tells me. How does she know that? Because she owns it. And she did something interesting, and I'm going to point that out to you because it embodies the best of trading, and it's what the pros do, but you and I and individual traders find it really hard to do. She's mastered it, and she didn't know anything about the stock market till she started working for Chaikin 4 years ago and using these same indicators that we're going to be showing you today. So our solution to information overload is called Chaikin Analytics, and the charts, the examples we're going to show you today are taken from that platform. Now, time is our most precious commodity. There's just not enough of it because of the information overload problem. Because of that, we integrated this options play ideas module into Chaikin Analytics. Once you've identified the right stocks and given yourself a directional edge on either the upside or the downside, you got to find the right option strategy. And for most people, it's daunting. Options chains, Greeks, implied volatility, so much information to process. Another example of information overload. So to help solve that problem, save you time, we've integrated options play. And that's another way you can trade options like an expert. Take all the things that the experts look at, put them under the hood, just get in the car, turn on the ignition, and drive to where you need to get. So options traders need an edge. I call it the directional edge. At Chaikin, we give you that directional edge by combining fundamentals with technicals into a quantitative model that we call the Chaikin Power Gauge rating, and then give you 6 pairs of exits and entry signals to help your timing. Now, if you're following Steve Bigalow, you've got some really powerful candlestick timing signals. They work well, stick with them. Use his special line based on an 8-period exponential as a way to make sure you're on the right side of a trade in the market. But you need good, methodical, disciplined exits and entries. I'm going to show you examples of that in a minute. Now, we've encapsulated the whole Chaikin methodology into this pyramid because successful trading demands a disciplined methodology. So at the top of the pyramid, the Chaikin Power Gauge rating, our 20-factor fundamental indicator. We also think industry group and sector strength is very important. It's a way to put the wind at your back. At the bottom, just 2 technical indicators. Now, I actually have used that 8-period exponential for over 15 years. That's why I was so intrigued when Steve Bigalow and I got together with this very synergistic partnership where we present to each other's audiences. Chaikin money flow and Chaikin relative strength. And you'll see on the charts how easy it is to know the technicals with just 2 indicators, and then in the middle, the sweet spot, those buy and sell signals. So let's look at 2 patterns. The first we call a classic Chaikin bull. It's a way to find stocks to trade on the upside. The power gauge rating, our fundamental indicator, is bullish. That means it's green, or that arc is all the way to the right. Stock is outperforming the market. I'll show you why that's so important and how you can gauge it in a second. And Chaikin money flow, which measures institutional buying and selling, is green, telling you, just as we saw with the SPY, that the institutions are accumulating that particular tradable. Now, our poster child for the classic Chaikin bull, which has been the case for the last 9 months, is Applied Materials, large cap semiconductor equipment manufacturer. At the bottom of this 1-year chart, you see the power gauge rating is a ribbon from red to yellow to green. Notice there's no red there. It's been predominantly green for over 15 months. What does that mean? It means that the 20 factors in the Chaikin power gauge rating are indicating the likelihood that this stock is going to outperform the market, and we're going to show you what those factors are in a moment. Right above that is our proprietary way of looking at relative strength. We've converted the numbers that you might see in Investors Business Daily, where they rank stocks on a scale from 1 to 99, into a heat map that goes from red to green. In this case, what has AMAT been doing? It's been outperforming the market for the last 12 months and even longer. Above that, our overbought, oversold indicator, Chaikin money flow, and then on the chart, for each of the 4 quarters that are shown on this chart, when the company reported earnings, we color the earnings icon, the EPS icon, either red, gray, or green. If they outperform, as AMAT has done, Wall Street estimates, then it's colored green. And you can see how the price reacted to that. And then on the screen is one of those 6 pairs of buy and sell signals. In this case, we call this our oversold buy signal. We all have mentors in this business. One of mine was Larry Williams. He's sort of a long distance mentor. I've met him once or twice at conferences, but I patterned my Chaikin money flow on accumulation distribution research that Larry Williams did in the late 60s and early 70s. This particular pattern is also one that Larry Williams highlighted. It's so simple, but so powerful for options traders. A stock that you like, in this case, our power gauge rating has to be bullish, makes a new 8-day low as it gets oversold. According to Larry Williams, it's a great entry point. It really works if you've got a directional edge like the Chaikin power gauge gives you. Now, this indicator works about 2 out of 3 times. It's perfect for options traders who have a short-term time horizon because it has a duration of 5 to 10 trading days. So typically, you might go from the 21-day average in the middle of the volatility bands to the upper band in that 10-day period. Highly reliable, works 2 out of 3 times. Nothing works all the time, but notice how effective these signals were when everything is lined up. So you got your directional edge on the bottom, you got relative strength, which tells you whether the market agrees with the model. That's so critical. We call that the dynamic duo, relative strength and the power gauge rating, and those signals are your entry points. The purpose of this webinar is to convince you that if you have a disciplined methodology, you're more likely to pull the trigger and get into that trade. How many times in 50 years of trading have I had the ideal setup, and because of the headlines or some sort of sell-off in the stock or the market, not pulled the trigger on a trade? I know all of you have experienced that. which is why I try to pull it all together on one chart so that when the signal happens, you're likely to pull the trigger and benefit from that disciplined methodology. Now, once you know that there's a way to find quality stocks to trade from the long side, you also have a way to find them. So we have a screener built into Chaikin Analytics, and this screen, which is about, I guess, 2 or 3 weeks old, comes from a webinar I did about 3 weeks ago. I took the Russell 3000, required that our power gauge rating be very bullish, and I programmed those 2 other components, the classic bull, the Chaikin money flow, very strong, relative strength strong. Then I added one other factor. I wanted the earnings surprise factor to be strong, because as you'll see, earnings surprise, when it's positive, is a way to make a lot of money in options with limited risk and very high potential. And in this case, we narrowed a 3,000 stock universe down to 13 names. These stocks have done well. Anthem Health was 180 back then. It's trading at 187 today. These stocks in the main have done extremely well. But the point is, you can find winning stocks methodically if you've got a way to take the factors that contribute to winning stocks and apply them over and over again every day. Now, the flip side is equally as important. This is also part of playing defense, knowing what to sell. We call these classic Chaikin bears. Power gauge rating is bearish, meaning that the fundamentals are lined up against the stock. It's underperforming the market, and Chaikin money flow is red, not green, telling you that the institutions are selling the stock. Look at the middle of the chart. That sea of red in Under Armour, which was a big institutional favorite, darling of the hedge funds, saw the power gauge rating go bearish in late July of 2016 when the stock was above 40. But the institutions were already selling the stock. There's a pattern in here that we call a bearish money flow sell alert. When the stock makes a new high there in August, near that upper volatility band, Chaikin money flow should be going green. Instead, it stayed red because the institutions were just selling the stock. And then along the way, this stock with bearish fundamental potential, underperforming the market, gave these relative strength sell signals. Now, these sell signals have a longer duration than the overbought, oversold signals, 4 to 8 weeks. They're great for swing trading or options trading, where you're taking a longer view and you can ride out and trade it for 2 cycles. They're highly reliable, 70% accurate. And again, very simple. Stock is underperforming the market, moves above its 21-day average and drops back below the 21-day average. That triggers the relative strength sell signal. And here's a stock that's fallen out of favor, periodically gets a buy recommendation on CNBC, positive earnings surprise about a month and a half ago, pops up just as it did today. Don't be fooled. If the power gauge is bearish and it's underperforming the market and it gets overbought with negative money flow like it did today, you don't want to be chasing that and bottom fishing. You want to look for opportunities to buy put options. So we're talking about the Chaikin power gauge rating. It looks very simple, looks like the gas gauge on your car. But under the hood, there's a lot going on. We're crunching all these numbers, and the Chaikin power gauge rating can be that directional edge that you need during earnings season. It can be a GPS that tells you whether a stock is likely to disappoint or outperform, and that contributes, as I said, to some big, big options opportunities. So there's a lot going on under the hood. There's more going on than meets the eye. And John Carter, who's another partner of ours, was introduced to the power gauge about a year ago and immediately gravitated toward it, said, awesome meter for stocks, combines 20 plus technical and fundamental factors to anticipate a stock's potential, and it got my attention. So he called it an awesome meter for stocks. And let's look at those 20 factors that intrigue John Carter. Well, they're grouped into 4 primary factors: financials, earnings, technicals, and expert opinions. And in each of those categories, we have 5 inputs or subfactors. So the financial metrics are 35% of the model. It's what Warren Buffett looks at. It's what Seth Klarman looks at. Now, how many of you know who Seth Klarman is? If you do, type a big K in the question box. Almost no Ks. He's probably the most successful value investor in America, and he's better known now because his horse won the Preakness 3 weeks ago. He uses the same type of analysis that Warren Buffett does. In the earnings category, again, 5 factors, and we like to emphasize earnings surprise. Technicals are only 15% of the model, but they keep it honest. And then our secret sauce are expert opinions. This primary factor reflects what the smartest people on Wall Street are thinking and doing. So we look at short interest ratio. The short sellers do a lot of research. You couldn't survive an 8-year bull market as a short seller like Jim Chanos if you didn't do good research. And then we look at insider buying, because who better than corporate management to know what the prospects are for their company? So if they take out their wallet, write a check, and buy their own stock, what are they saying? They're saying, we see good things coming over the next 12 to 18 months, because they've got to own that stock for 12 months as an insider. So we've built a very robust model, and the reason the model works, it's because it's based on how Wall Street works, how smart institutional investors look at the market. These are the factors that my mentors showed me were important. Now, not every successful investor looks at all 20 of these. So value investors look at the financial metrics. Someone like a Jim Cramer, who ran a great hedge fund, very smart man, looks at earnings and technicals. Expert, not always found in a quantitative model. It's really our secret sauce. And then we've boxed industry group relative strength because we think that's important, and we're going to show you a brief example of that. But I just want to refer to a pattern that repeats over and over again. It has for the 50 years I've been in Wall Street. Company reports a positive earnings surprise, as we saw with AMAT. They don't come one at a time. They come in bunches. 4, 5, 6, 8, 10, 12 quarters in a row. A stock we're going to look at in a minute, Lam Research, 16 quarters in a row of positive earnings surprises. What happens on Wall Street is that when a company reports better than expected earnings, Wall Street analysts raise their estimates. Academic research and smart hedge fund managers know that analyst earnings estimate revisions are the single biggest short-term driver of stock price movement. So this model, which I'm asking you to believe in based on the proof points we're going to show you, combines bedrock value metrics with more sensitive factors that drive short-term stock price movement. It's a powerful combination with a proven record of success. Now, let's look at some performance metrics for the power gauge rating. In 2016, using the Russell 3000 index as our universe, the average very bullish stock was up 32%. Not bad. If your account was up 32% last year, give yourself a round of applause. The average very bearish stock up only 9.5%. So there's a big spread between what the very bearish stocks do and what the very bullish stocks do. Now in 2015, it was even more dramatic. The very bearish stocks in the S&P 500 and also in the Russell 3000 were down. In the Russell 3000, because it's loaded with energy stocks, fracking stocks like Range Resources, Kinder Morgan, Pioneer, average very bearish stock down 17%. So if you were in small caps or energy stocks in 2015, you were treading in bear market waters. On the other hand, the very bullish stocks were flat, which is what the market did in 2015. Now, one final proof point, and then we're going to get to some really specific examples. We've got a partnership with Nasdaq that's proven the value of the Chaikin Power Gauge rating. In 2014, we launched 3 co-branded Nasdaq Chaikin Indexes, large cap, small cap, and dividend achievers. Nasdaq did about a 9-month due diligence, convinced themselves that the power gauge rating had value, could find winning stocks, and said to us, take our indexes, apply the Chaikin methodology, and come up with a subset of the best. So in the small cap space, we took 1,500 stocks, which is roughly the equivalent of the Russell 2000, applied the Chaikin methodology with the final requirement that the Chaikin power gauge be bullish, and typically 225 to 250 names. It's called the Nasdaq Chaikin US Small Cap Index. There's an interesting requirement here. These are buy and hold indexes that Nasdaq rebalances once a year. So the Nasdaq Chaikin indexes couldn't change. In essence, they said even if a stock sees the power gauge rating go bearish, which has been rare in these indexes, you can't do anything about it. These indexes, which have been rebalanced 3 times, have outperformed the small cap benchmark by 2,000 basis points over 3 years. That's over 6.5% a year. The Nasdaq Chaikin indexes were up 42% over 3 years versus the Russell 2000 up only 21%. Because of that, Mainstay Investments, which is a subsidiary of the largest mutual insurance company in America that runs $650 billion, licensed all 3 of those indexes, registered them with the SEC with the idea of launching exchange-traded funds based on the indexes. One of them was launched 2.5 weeks ago. Not allowed to talk about it, not meant to be a recommendation to buy it. What it is validation that the power gauge rating works, not just for traders, but for investors. And if a stock's going to outperform the market over the next 12 months, you want to be trading it from the long side. So let's look at 2 other patterns that help you make money in the market. One of them we call personality changes. And I think it's really the key to making and keeping profits, because too often we put our feet in cement. We fall in love with a stock, or we fall out of love with it, and we don't look at it objectively on a daily or a weekly basis to see if something is changing. So why is the personality change important? Well, here's an example, Anthem Health. You saw that on our bullish screen earlier. This stock was underperforming the market heading into the election in November because there was concern about a Hillary Clinton victory and how it might affect healthcare stocks. Once Trump got elected, the stock started to break out, and the relative strength indicator went from red to green. We call that a bullish personality change. The power gauge also turned bullish. And then look at the Chaikin money flow. Look at the institutional accumulation since November in this stock. It's never gone red. When I devised this indicator in 1981, it was meant to revolve around a 0 line. If you go to stockcharts.com, you can see this indicator. For most stocks, it fluctuates as an oscillator between red and green. In this case, institutional investors have been buying Anthem Health consistently since November, over 7 months, and you can see the price action. Since the bullish personality change at about 130 in price, the stock has gone up to 187, 188. That's a big price move in a group that's been pretty controversial. Now let's look at a bearish personality change. This is Hertz, the rent-a-car company. Stock had a bearish personality change. It was already down from 50 to about 25, a point where a lot of people might have been bottom fishing, but the power gauge was bearish and it started underperforming the market at that point with a negative earnings surprise. So that bearish personality change was a red flag that said, don't bottom fish. If you own it, take your lumps and take your losses and start looking for opportunities to trade it from the short side, because from that point, $25, the stock traded down to 9. And along the way, you got these relative strength sell signals and a series of negative earnings surprises. That's why it's so important to spot personality changes. It keeps you on the right side of the market, and it means that your trades are going to be aligned both with the fundamentals and the technicals. Now, the last pattern I want to talk about is very, very powerful. We call it self-accumulation and distribution because Chaikin money flow measures what institutions are doing. Institutions like to fly under the radar screen. So here's an example of that. Lam Research, just like Applied Materials, makes semiconductor equipment. It's had a bullish power gauge rating for 15 months. It's been outperforming the market. That's why group strength is so important. AMAT, Lam Research, same industry group. And there's been persistent accumulation since January in the stock. Notice the fluctuation between red and green in December. But since January, Chaikin money flow has gotten stronger and stronger and stronger. And in a webinar that we did in February, it had just triggered an oversold buy signal at a price of about 117, where that first yellow arrow is. And then again, before this latest earnings report, another oversold buy signal. Now, my wife, Sandy, who trades in her IRA, bought it on that second buy signal. And the first, she's telling me. She's backseat driving this webinar, which I appreciate because she's generating the profits in the family from trading. But she did something very smart. When she bought it the second time at 122 and then saw it spike up to 140 on that positive earnings surprise, she took her profits, only to see the stock just keep climbing and climbing and climbing. So when it pulled back on that 2-day pullback below 150, what did she do? She did what the pros do. She bought it 10 points or 9 points higher than she sold it. And look where it is today, 165. Now, along the way, institutions just got more and more bullish on this stock. These are great call buying opportunities. You can buy call options. You can do those vertical call spreads. And about a week ago, when the stock was trading at 150, Deutsche Bank, who has a very, very fine semiconductor analyst, raised their price target from 155 to 170. That's the importance of analysts' earnings estimate and earnings target revisions. That's why Lam Research has continued to go up, defying gravity, if you will. No pullbacks. If you're waiting for the pullbacks, you didn't get them. That's why you had to pull the trigger when you got those oversold buy signals back at 112 and then again at 122. Discipline methodology. The next earnings report is due out, and you see that on the top of the screen, July 26th. What do we expect? Well, our earnings surprise indicator is green, so we expect another positive earnings surprise. There will come a time when Lam Research disappoints, but the trend is your friend in price and in earnings surprises as well. Now, when we did that webinar on February 15th, you just had a oversold buy signal. The stock was trading at about 115.71, went into options play, and it proposed this vertical call spread as a way to play Lam Research. Buy the 115 call. In this case, it was due to expire in about a month. Sell the 120 call against it. You pay 195. You got a profit potential of 305. That was realized within about 2 weeks. So when I said these oversold buy signals work over a 5 to 10 day trading period, there's an example of that. So that's a very simple way to benefit from a reliable signal. Use the vertical call spread. You can use it on one of Steve's candlestick buy signals. Monitor that magical 8-period exponential line. Steve, what do you call that line if you're on? I never remember it because I always think of it as an 8-period exponential.
The T line.
The T line, there it is. Where'd you come up with the word T line? I love it.
Oh, we were trying to figure out a name for it. We were calling it the trigger line. And we finally, somebody just said, let's call it the T line because it takes into all the all the definitions they're coming up with. So,
Well, it's magical. If you look at Lam Research, I doubt since that second buy signal that it's ever been below the T line. And that's the power of having some technical tools that make sense, that are proven, that work. So let's look at another pattern with Chaikin money flow that we alluded to when we looked at Under Armour. We call it the bearish money flow sell alert. We've been teaching this to institutional investors since 1982. It is perhaps the only pattern I know, other than the doji candlestick pattern, that will enable you to sell a stock at a high with a great degree of confidence that you're not leaving a lot on the table. So here's an example of it in advanced auto parts. And we're going to talk about the whole auto parts sector and how we've been viewing it negatively in a few minutes. But you get this bearish money flow sell alert when a stock makes a new high near that upper volatility band, gets overbought, and Chaikin money flow stays red or negative. What does that say? It says the institutions are selling on strength. Who's buying? It's the public. Or it's the Merrill Lynch customer who's responding to a Merrill Lynch analyst who's late in the game, put out a buy signal on the stock. Not singling out Merrill Lynch, but Wall Street analysts are sometimes late to the party. So this is a powerful pattern. When you see it, react to it. If you're long the stock, take money off the table. If you're thinking of shorting it, it's a great time to put on a put spread. And look what happened to the stock. Bearish earnings surprise, and then right before this latest earnings report, we had an overbought sell signal. That's a new 8-day high with the power gauge bearish. In this case, money flow is positive, but the signal doesn't care. You got a negative earnings surprise. The stock spiked down from 150, made a new low today below 130. Market's making new 52-week highs. This is making new 52-week lows. And if you were following this bearish money flow sell alert, you might have sold this stock up around 175. Now, 6 pairs of buy and sell signals. And here again, just as with the classic bulls, you've got to have a way to find them. So as good as your signals are, if you don't know they're happening, they're no good to you. So again, from a webinar I did in February, on February 9th, this was my alerts dashboard in Chaikin Analytics for iPad. In a list that I follow, these were the stocks that triggered buy signals because the market was pulling back. KB Homes makes homes for first home buyers, which is a market that's starting to boom again, gave an oversold buy signal at 1625, and Darden Restaurants gave what we call a reversal buy. And Steve, I don't think I told you this, but a reversal buy happens when you go up through the T line. And I've been trading this pattern for over 10 years. Stock that's been underperforming the market goes back up above the T line, and that triggers a buy signal. So Darden triggered that at 73.44. Let's see how they worked out. That was the buy signal on KB Homes. 1625 went all the way to 22 with all this powerful money flow. And then Darden Restaurants went from 73 up to 92. Disciplined methodology, use options to trade these. You know what your risk is. It's the cost of the option or the spread. And you've got the potential to really outperform when the stock catches fire. Now, we talked about sector and industry group strength or weakness. Zacks, Investors Business Daily, Standard & Poor's have all written white papers over the years that show you that a stock's movement is 60% correlated to the industry group it's in. So strong industry groups traded on the long side, those stocks give you tailwinds. They increase your profit potential. If you're bottom fishing in weak stocks and weak industry groups, that creates headwinds, makes it harder to make any money on the long side, but they're great for finding short candidates. One quick example, technology leading the market higher. It's been overbought for weeks. I've circled here the Chaikin money flow coming into the XLK. This is the Select Spider Sector ETF. Now, how many of you trade options on either index ETFs like the SPDR or the Triple Q or sector ETFs. If you trade index ETFs, please type an I in the question box. If you trade sectors, type an S. And again, this is fairly typical. Most of you trade index ETFs, but not sector ETFs, and you're missing out on something. It's a way to make a big bet on a sector without having to pick the stocks. Now, we've given you the tools to find the AMATs and the LAM research, but look at the money that came into the sector ETF back in January and February, and look how it's been outperforming the market and making new highs ever since. So we looked at two large cap tech stocks, AMAT and LAM Research. Now let's look at a small cap ETF. And I love to give the examples that my wife Sandy has bought, because if Sandy can do it, you can do it. Started trading stocks just 4 years ago when she came full-time into Chaikin Analytics, coordinating our marketing and PR and creating an outreach to women, because women typically are not on webinars like this, but they need to be. So look at that buy signal, that oversold buy signal at a price of about 18.20. Sandy followed that buy signal, and she's still in Acellus, which is a small cap semiconductor stock today, made another new high, up 4% today. It hit 25.95 at its peak, closed around 25.70. This is an example of how you can leverage the knowledge that you get by analyzing the sector ETFs in Chaikin based on the number of stocks with bullish versus bearish power gauge ratings, the relative strength and the money flow. So big profits, outsized percentage gains in small caps versus large caps. So that's a 50% plus move, almost 60% in Acellus in just 2 months. Now, LAM Research went up very nicely, went up about 20%. I like 60% more than I like 20%. Small caps are more volatile. Obviously, don't want to put all your money into small caps. I think they're going to play catch up here. They Russell 2000 almost made a new high today, probably do that tomorrow. Bottom line is discipline. Follow the signals, look at the money flow, power gauge, relative strength. Now, we talked about playing good defense. Playing good defense means a lot of things. First of all, it means good risk management and money management. Don't risk too much on any given trade of your capital. Use option strategies that limit your risk. Diversify. That's all nuts and bolts, bread and butter defense. But good defense can also lead to good offense. And here's an example of that. We're often asked, what do I do in a bear market? You know, Chaikin has helped me make money in a bull market. How do I make money in a bear market? Well, this is a pattern on the screen that a market strategist named Richard Wyckoff developed 92 years ago. It shows you an idealized way that stocks move down from a distribution peak to a bear market. And by the way, a lot of the signals that Steve finds with the candlesticks and that we find with our overbought, oversold, and relative strength signals correspond to these patterns, to that rally back to a breakdown level, to the consolidation patterns that then result in a breakdown to new lows and so forth. So 92 years ago, Richard Wyckoff developed this idealized way that stocks move up and down, and it's working today. And the reason it's working is this is based on human nature. It's that fluctuation between fear and greed, people who react to the headlines instead of taking advantage of them. So can Chaikin help you make money in a bear market? Well, you bet it can. Because even though we've been in an 8.5-year bull market since we bottomed out in March of 2009, energy stocks went into their own bear market. This is the XLE, the Select Spider Sector Energy ETF. These are the large cap energy stocks in the S&P 500. And from a peak in 2014, we're now looking at a 5-year chart. The XLE dropped from 100 all the way down to 50. So that sure feels like a bear market to me. And along the way, if you were looking for energy stocks to go short, to buy put options, to do a vertical put spread, there were plenty of opportunities, and Kinder Morgan was one of them, because even though the XLE peaked in late August of 14, Kinder Morgan continued up into early 2015. They sort of seduced Wall Street with a 20% yield. The advisors were buying it for their yield-oriented clients, so were individual investors. And they did a roll-up of all their master limited partnerships. So a little bit of financial engineering, not quite Enron, but not quite kosher. And Kinder Morgan, when it peaked, saw the relative strength, have a bearish personality change, power gauge turned bearish, and this stock dropped not 50%, but it went from 42 all the way down to 10. It dropped over 75%. Now here's what a one-year chart looked like. This chart ends in 2016. You can see where the power gauge went bearish and where you had that bearish personality change, with the stock trading at about 40 on its way to 10. And along the way, the institutions were selling. It was underperforming the market, and you got these wonderful overbought sell signals. And the message from this chart is it's never too late to sell a stock where everything is lined up against it. Had one of the investors in Chaikin Analytics, who's one of the most successful value investors ever, sold his money management firm to Legg Mason, call me and say, Mark, what should I do with my Kinder Morgan? It was 30 down from 42. I said, Tony, you should sell it. He said, oh, but they've got this great dividend. I said, the power gauge is bearish, doesn't know about the great dividend. He said, well, I know they can cover the dividend. Then he called me when the stock was 20 and he said, what should I do now? And I said, well, hopefully you've sold it. He said, no, I held on to it. So even the smartest investors on Wall Street can put their feet in cement. That's why it's so important to follow the personality changes and have a disciplined methodology, and know that it's never too late to short a stock. Even when it's down from 42 to 25, if it's going to 10, or like Hertz from 50 to 9, you want to be on the right side of that trade. Now, what's energy doing right now? Well, with the market making new 52-week highs, new all-time highs, energy once again is in a bear market. The XLE rallied all the way up to about 78 and traded down to 65. So in a market that's making new highs, energy is down 20%. That's a bear market. That's large cap energy. Small cap energy is doing even worse. Along the way, you got that bearish personality change, institutional selling, and you're looking for opportunities in stocks like Schlumberger, where you had the bearish personality change, institutional selling. Can you see that in the money flow? Excuse me one second. Money flow is red even when the stock rallies, and right ahead of the earnings report, back in April, we had a relative strength sell signal. Remember, I said they work 70% of the time and they last for 4 to 8 weeks. This is a perfect example of that. You could have been shorting Schlumberger at about 78 on the way to 68 when the market was making new highs. You could have been trading energy stocks from the downside. If you looked at smaller cap energy stocks like Devon, just got totally destroyed. Kinder Morgan's going back down again to new 26-week lows. Follow the industry and sector trends and look for the signals and the money flow, and you're going to be on the right side of those trades. So we're going to end the webinar with how you make money using options during earnings season. Earnings season happens 4 times a year. This is for companies that report on a calendar year basis, meaning their fiscal year ends December 31st. They report earnings in January, April, July, and October. So 4 times a year, you get an opportunity to use the Chaikin Power Gauge rating as your GPS. Now, there's an enormous amount of volatility during earnings season because there's a lot of speculation in the media about whether companies are going to miss estimates or beat estimates, and management's going to say something about the future that's either good or bad. And a lot of people don't like to trade during earnings season. They're spooked by the volatility. It's just like the headlines about politics in Washington. Volatility equals opportunity. So if you can know with a high degree of reliability whether a stock is likely to beat estimates or disappoint, and the power gauge rating is a proven indicator that doesn't work all the time, but if the power gauge rating is bullish, the stock is twice as likely to report a positive earnings surprise. It's one of the 20 factors in the model. On the other hand, if a stock has a negative bearish power gauge rating, it's twice as likely to have a negative earnings surprise. So let's look at some examples. I write a weekly market letter called Market Insights. It's part of our Chaikin Analytics product. On April 9th, this comes out on Sunday once a week, I recommended 3 bearish auto parts retailers to sell on strength. They were trading at new lows, and I didn't think that was a good time to put on a put position. Advanced Auto Parts, AutoZone, and O'Reilly. Here's AutoZone. There was the rally after the April 9th sell recommendation, rallied to 718, and then after a negative earnings surprise, dropped to 550. It then rallied all the way up to around 630. Don't bottom fish. Power gauge is still bearish. Bottom fishing is one of the most expensive sports in America. It's dangerous to your financial health. AutoZone has given up a lot of that gain. I think it was down 15 or 17 points today. And we're going to see what these other 2, Advanced Auto Parts and O'Reilly, did. So as with signals and finding bullish stocks, you have to have a way to monitor upcoming earnings reports, but it's not enough to just know that a company is going to report. You got to know what the power gauge is saying, what the fundamentals are. It doesn't have to be the power gauge. You can get your fundamentals from William O'Neill and Investors Business Daily, but you've seen how we consolidate it all on one chart and make it easy for you. So for a webinar we did in April, we highlighted 2 bearish stocks, O'Reilly in the auto parts business, ORLY, and Helmerich & Payne in the energy drilling sector that were due to report earnings. And then on May 22nd, we highlighted Advanced Auto Parts, a month after O'Reilly reported, and Best Buy, which had a bullish rating. So let's see how those stocks did. Here's O'Reilly. We said sell it on strength on April 9th. You had 3 opportunities to sell this stock on strength. One of them came just before a bearish earnings surprise where the stock dropped from 270 down to 240. A 30-point move is a great options opportunity. It traded down to the lower volatility band, rallied again. Great opportunity when it got overbought to sell it, put on a bearish put position. Spiked down to a new 52-week low, and then rallied a 3rd time. You can go back to the well when everything is lined up. Relative strength is bearish and the power gauge is bearish. And look what the stock did today. It made a new 52-week low with the market making new 52-week highs. Now, Helmerich & Payne is in the same industry group as Schlumberger. Notice relative strength sell signal about a week and a half ahead of an earnings report. Previous earnings had been a negative earnings surprise and a gap down. It repeated that pattern. If you had followed that signal, you could have put on a bearish put spread at 68. The stock traded under 50 yesterday. Institutions continue to sell it. Now let's look at Advanced Auto Parts. A month later, AutoZone has already reported, O'Reilly has already reported. Advanced Auto Parts, negative earnings surprise. You had an overbought sell signal ahead of the earnings. Negative earnings surprise, stock spiked down from 150 all the way to 130. Again, these big 20 and 30-point moves give you great opportunity to benefit on put spreads. And you had a bearish personality change. That's why it's so important to follow the personality changes. So the whole group was weak, and that reinforces the notion that group and sector strength are your friend. They give you that tailwind. Don't bottom fish, turn it around and be bearish with put positions on these weak stocks and weak industry groups. And now to end the webinar, we're going to show you our newest innovation. This is what we won the Benziga FinTech Award for Best Ideas Platform. We call it our Stock Discovery Engine. It's based on the same principles that Netflix uses to find you movies that you're likely to enjoy, and Spotify and Pandora use to find you music that you're going to like. In fact, we codenamed this when we were developing it Pandora for stocks. And what this is a way to find stocks that are similar to a stock that you're either bullish or bearish on. So in this case, I took our classic Chaikin bear Under Armour. This goes back to a webinar I did a few months ago, and I put it into our stock discovery engine, which is a way to find profitable ideas. So I entered the symbol UAA, and it came back with 5 stocks with very similar characteristics to Under Armour in the apparel group, mid-cap, market cap, bearish earnings estimate trend, featured bear, and I immediately zeroed in on Lululemon. Why? Because I knew that they were due to report earnings the next day. So on that webinar on March 30th, I said Lululemon, which was up 4% ahead of the earnings report, is a wonderful put candidate. The next day, Lululemon reported earnings, and look what happened. It gapped down 23%. Imagine the put profit potential if you put on that spread when the stock rallied ahead of the earnings report, knowing that it was very similar to a classic bear like Under Armour. Really powerful, powerful tool to find winning stock ideas. Now let's look at a more recent example of how we use the stock discovery engine. I took Advanced Auto Parts, which we've already seen is bearish. It's in the consumer discretionary sector, retailing stock. I typed the symbol in, and it immediately gave me those 2 other auto parts stocks, plus Macy's, which is in the very poor retailing group, and Target. So stocks similar to Advanced Auto Parts, where I might want to look for short sale opportunities. But then it offered me potential swaps. These were other stocks in the retail sector. There are no bullish auto parts stocks, but I zeroed in on Best Buy because remember from that earnings calendar, bullish power gauge rating due to report earnings, suggested on the webinar that a bullish call spread might be an interesting way to play Best Buy that was due to report earnings the next day after the close. And here's what happened. We had a relative strength sell signal ahead of the earnings report. You had a bullish earnings surprise. The stock spiked up from 50 to 60. It's been going sideways ever since, but everything was lined up. Power gauge bullish, money flow, relative strength, and a signal. We call that the ideal setup. Warren Buffett calls it the fat pitch. You want to swing at fat pitches. They don't call balls and strikes on Wall Street, so you can wait for the ideal setup. And this was the bullish call spread that we suggested on the 524 webinar as a very low risk way to play a potential positive earnings surprise. By, at that point, the June 50 call, sell the 57 call against it, paying $247 per 100 shares with the potential to make $450 profit. That potential was realized in 1 day because of that spike. That's what happened to the spread. It widened from 247 to 692. And now that the stock has gone sideways, you could consider putting on, say, a 60-65 spread. Buy the 60 call that expires in July, sell the 65 call against it. Fairly similar profit potential, slightly lower, but the stock has gone sideways since that spike, which is a great time to get into a high momentum stock. Again, not recommendations, just suggesting that this is how you can use options to trade like an expert. So we've been looking at Chaikin Analytics, which combines fundamentals with technicals. It now includes our stock discovery engine, which we won the Benzigo Award for. Very proud of that, not for me, but for my team that built it. 28 people in Philadelphia, dedicated to your success, building products, supporting them to help you make money, trading options and stocks. It includes options play, the screener, the earnings alerts, news, intraday charts. It's a complete package, and it normally sells for $1,950 a year for an annual subscription. Because of our relationship with Steve Bigalow, we'd like to discount it $200 as a webinar special, reducing the price to $1,750. You can go to chaikinanalytics.com/options, and this offer expires Sunday, June 11th, or you can call the number on the screen. We've got our support staff and our sales team ready to talk to you and answer any questions. 877-697-6783. And I know Joe Bicella at this point usually types in the URL into the chat window so you can click on it and get right to our fulfillment page. Now, along with everything you've looked at, we have small group tutorials 3 times a week. Joe Bicella runs them along with his customer success team. The purpose is to show you what's in Chaikin Analytics, how to use it, and why, most importantly, it's a benefit to your trading. Great to have wonderful features, but you got to know how to use them and why they can help improve your trading. Then you get my colleague John Schlitz's daily morning insights that comes in your email before the opening, so you don't have to stay glued to CNBC to know what's going on, what happened overnight, and what's going on pre-market, and my weekly market insights where you get ideas like the 3 bearish auto stocks to sell on strength, or the small cap semiconductors like Axcelis that were featured bulls. All comes packaged with Chaikin Analytics. Just one testimonial. I used to load the webinar with testimonials, but I think they get in the way of the message and the education. 10x return in 5 days. And the 5 business days that I've been using Chaikin Analytics, I've paid for the subscription over 10-fold. These initial results are nothing short of astounding. Please extend my thanks to the entire Chaikin team. And as I've described to you, this company has gone from 2 people, my wife Sandy and I, starting it in 2010, to 28 people in Philadelphia dedicated to your success. So as a final inducement to get you on board as a Chaikin subscriber, and we've got the wrong code in here, I apologize for that, taking an additional $100 off the cost of Chaikin Analytics, reducing the price to $16.50. And for the first 10 people who subscribe tonight, one-on-one phone call with me. It's chaikinanalytics.com/options. And this is a really powerful offer. I think people have gotten these one-on-one phone calls, and we're happy to do them because they're good for me and they're good for you. Have really gotten a lot of value on it. So with that, I'll ask Steve if he's got any final words as we wrap up the webinar.
I do. Thank you, Mark. Yes, as I've often said, that if you can take a universe, whatever your universe is, and make it to where the probabilities are in your favor, and then add candlesticks on top of it, you're just improving your probabilities megafold. And with Marc's indicators all put into an analytical quantitative setup, essentially you're looking at charts that tell you the probabilities are in your favor. Now all you have to do is hit the right timing, and you're again putting all the probabilities in your favor of being in the right place at the right time. So once again, I am envious of what Marc has done. I wish I could have done this years ago. I just didn't have the wherewithal to do it. And so this is excellent. I want to say excellent, and an excellent tool that no matter what type of trading you're doing, it's going to put you in the right place at the right time. So Marc, I just love your stuff, and I think this is one of the most valuable tools anybody can pick up.
Well, thank you, Steve. I really appreciate that, particularly coming from you. And I got to tell you, I was retired for 10 years, so that's where I got the wherewithal and the energy to come back out of retirement and build this model. It was a major effort, and by recharging, I got the energy to do it. And so appreciate the kind words. And Joe, why don't we turn it back to you to wrap up the webinar?
Yeah, great. Awesome. Yeah, I think the best way to kick this off is just by saying there's a testimonial that came in a second ago from a current subscriber. Charles here just saying, just wanted to let you know that I looked at a service that recommends specific earnings trades leading up to, of course, earnings dates. And he said after about a month, he canceled that service simply because Chaikin Analytics was more accurate. I just wanted to point that out. So we really appreciate that, Charles, coming through here. But Marc's offer here, right before the week wraps up, take advantage of Marc's offer. That's $16.50 for a full year to Chaikin. Again, that is a full year's worth of access. I saw a few questions about that in the Q&A window. But this is, of course, discounted rate, chaikinanalytics.com/options. Our support team is sticking around, 877-697-6783. You can join me tomorrow for our last support webinar of the week. That is our onboard session, perfect for each one of you to set you up in a good position to be successful with the program, whether you're trading earnings, whether you are looking for your next swing trade. We're going to cover all of the content that you need in order to get started. Of course, we're going to cover a lot of individual stocks as well. I saw a few stock requests throughout this evening. We're going to cover all of that during that onboard session. But in the meantime, make sure to take advantage of Marc's offer here, $16.50 for a full year to Chaikin Analytics. That includes all the charts you saw today, as well as, of course, the options play program. Give us a call, 877-978-6257. Again, our support line is available throughout the evening. In the meantime, everybody have a great evening, and we will see you tomorrow for the onboard session.